Stocks fell in choppy trading on Thursday as investors weighed several key earnings reports and kept an eye on the bond market, where Treasury yields continue to climb. The Dow Jones Industrial Average was down 158 points, or 0.5%. The Nasdaq Composite shed 0.8%, while the S&P 500 was down 1%. The Dow was up more than 300 points at session highs, but stocks faded as Treasury yields rose. The benchmark 10-year Treasury yield reached a high of 4.239% on Thursday, trading at levels not seen since 2008. Rising rates have been a headwind for stocks all year, as the Federal Reserve continues to try and cool off inflationary pressures not seen in decades. Before we continue, if you enjoyed watching the video, please share your thoughts by clicking the like button and writing them in the comments section below. If you subscribe to the channel and turn on the notification bell, you will be among the first people to find out when new videos are published on the channel. So let's just get started. Initial claims for state unemployment benefits fell to a seasonally adjusted 214,000 for the week ended October 15. Data for the prior week was revised to show 2,000 fewer applications filed than previously reported. The labor market has been largely resilient, though some cracks are emerging as the Federal Reserve ramps up its monetary policy tightening campaign. Factory activity in the Federal Reserve Bank of Philadelphia's district contracted again in October. The bank's index for general activity stood at -8.7 for last month, a modest improvement from September's -9.9 reading. Economists had expected a better performance, however, at a forecasted reading of -5.3. Report found local factory operators reporting higher employment and inflationary pressures. Prime Minister Liz Truss resigns after a failed tax-cutting budget that rocked financial markets. Her resignation follows a revolt within her own Conservative Party. Number of MPs calling for Truss to step down reaches 17. Number who have written letters to Brady expressing no confidence in the Prime Minister is reported to be over 100. Yields on 10-year and 5-year gilts were down by around 5 basis points after Truss' brief speech. The status of the Conservatives' expected budget update on October 31 is uncertain, but Truss said the handover would ensure we remain on a path to deliver our fiscal plans. German producer prices rose by 2.3% on the month and by an eye-watering 45.8% on the year, Statistics Office Status said on Thursday. Both natural gas and electricity were 3.5 times as expensive as a year ago, also driving up the cost of available substitutes, albeit by less. Heating oil prices were up 84% from September 2021. Excluding energy prices, the annual rate of inflation has now been in decline for 4 months, and totaled only 14% in September. Nitrate fertilizer prices have tripled over the last year, while food items such as butter and coffee rose by 72% and 32%, respectively. Industrial production in the region's manufacturing powerhouse fell in both July and August, and the German central bank and others have warned that a recession is all but inevitable. Australia created a much lower than expected number of jobs in September, while unemployment remains steady as elevated inflation, sluggish wage growth and higher interest rates appeared to be cooling a jobs boom seen earlier this year. The country added only 900 new jobs in September, well below expectations for growth of 25,000 jobs and last month's reading of 33,500 jobs, data from the Australian Bureau of Statistics showed on Thursday. The Australian dollar reacted negatively to the data, falling 0.2% to $0.6259. The central bank raised interest rates by a lower than expected 25 basis points, citing caution over economic damage caused by raising rates too quickly, too soon. Snap reported weaker than expected revenue for the third quarter. The company's net loss surged 400% to $360 million, partly due to a $155 million restructuring charge. Daily active users increased 19% year-over-year, but their average revenue per user was down 11%. Snap announced in August that it would lay off 20% of its roughly 6,000 employees. Snap shares have lost over three-quarters of their value this year and are down more than 30% since July. Apple's privacy update to iOS remains a barrier in Snap's ability to track users across the web, thus weakening its online advertising business. The company had $4.4 billion in cash, cash equivalents, and marketable securities as of September 30. Danaher, DHR, reported on Thursday third-quarter earnings that beat analysts' forecasts and revenue that topped expectations. Earnings per share of $2.56 on revenue of $7.66, 30 cents better than the analyst estimate of $2.26. Revenue for the quarter came in at $6.97 billion, compared to the consensus estimate of $5.94 billion. For the fourth quarter 2022, the company anticipates that non-GAAP base business core revenue growth will be in the high single-digit % range. Shares of American Airlines, Nasdaq AL, were up about 3% at $14.43 in pre-market trade. The carrier said it expects adjusted profit between 50 and 70 cents per share for the fourth quarter ending December. Analysts had forecasted a profit of 22 cents, according to Refinitiv IVE's data. Philip Morris announced earnings per share of $1.53 on revenue of $8.03. Philip Morris shares are down 26% from the beginning of the year, still down 23.12% from its 52-week high of $112.48 set on February 18. Philip Morris International, PM, reported Q3 EPS of $1.53. 16 cents better than the analyst estimate of $1.37. Revenue for the quarter came in at $8.03 billion versus the consensus estimate of $7.43 billion. Philip Morris International sees FY 2022 EPS of $5.81, $5.95 versus the consensus of $5.57. AT&T added 708,000 net new monthly bill-paying wireless phone subscribers in the third quarter, surpassing FactSet estimates of 552,300 additions. The company now expects adjusted profit per share for the full year to be $2.50 or higher compared with earlier expectations of $2.42 to $46 per share. Share of the company were up 1.8% in pre-market trading. The dollar hit the symbolic level of 150 yen for the first time since 1990 on Thursday. The greenback was supported by Treasury yields trading at multi-year highs. The Japanese currency has been on a losing streak for 11 straight sessions as of Wednesday's close. The euro struggled to regain ground it lost during a dollar surge the day before, while sterling extended its declines. Sterling was last down 0.2% versus the dollar at $1.1179, while the euro climbed 0.37% on the pound amid political turmoil in the UK. The surging greenback pushed the Chinese offshore yuan to a record low in Asia of 7.279 early in the session. It later trimmed intraday losses on a Bloomberg report that China is considering a cut in quarantine for inbound visitors from 10 days to 7. Gold prices edged higher on Thursday due to a slight pullback in the US dollar, although higher Treasury yields and prospects of more sharp rate hikes by Federal Reserve kept gains in check. Spot gold rose 0.2% to $1,631.54 per ounce by 09:09 GMT. Benchmark 10-year Treasury yields held near their highest since mid-2008, increasing the opportunity cost of holding non-interest-bearing gold. The Fed is widely expected to hike interest rates by 75 basis points at its policy meeting next month after U.S. consumer prices increased more than expected in September. While gold is often considered a hedge against inflation, rising U.S. interest rates increase the opportunity cost of holding the zero-yielding metal. Spot silver rose 0.2% to $18.47 per ounce and platinum climbed 0.3% to $886.50.